If you're over 73, it's time for us to talk about required minimum distributions, or we call them RMDs for short. So what are RMDs? Well, this is the amount that you have to take out of your pre-tax retirement accounts if you want to or not when you're over age 73. So what accounts do these impact? Well, this is going to be any sort of pre-tax retirement account. So think traditional IRA, any sort of employer-sponsored retirement account, like a 401k, 403b, 457 plan. And the IRS has a schedule that you have to follow. And again, that's why they call them required minimum distributions, because there's a minimum amount that you have to pull out every single year. And guess what happens if you don't take out that required amount? You could face a hefty penalty from the IRS up to 25% on the amount that you should have withdrawn. And you also have to recalculate your RMDs every single year because the IRS has a schedule that you have to follow. And as you get older, they're making you take out more and more out of the retirement account. Now, I always get asked, why do we have to do this? And I'm sure you already know the answer, but it's because of taxes. Because when you go to pull that money out of these pre-tax retirement accounts, that income, that required minimum distribution, is now taxable to you as ordinary income, and you're going to pay your highest marginal rate on that income. So are you still confused about what RMDs are? How do you calculate them? What do you do if you have different plan types? Well, check out our other videos where we've got plenty of information on required minimum distributions and other retirement planning topics.